Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to Wendy Lawrence, CEO of Totally PLC, a leading UK healthcare provider for the NHS. So welcome, Wendy.
Good morning. Good morning, Paul.
Now, lots been happening since we last spoke, not least the excellent first half results in November. But before we sort of run through how the business is sort of faring over the last sort of couple of months or so, can you just give me initial thoughts on the Omicron variant and what you're seeing on the front line, particularly maybe, the severity of the actual of the super strain?
Yeah, there are better brains than mine that can actually explain this technically. But I think what we're seeing is, this virus, like every other virus, is going to mutate and mutate. It's like the flu. Every year we get a different variant of the flu. I think the thing with COVID, we're getting variants regularly. So the majority of the variants that come through don't get reported because it's just a slight mutation. What you've got with this one is more mutations on the spike protein, and it's the spike protein that is what the vaccines work against. So I think there is a little bit of uncertainty around what it is, where it's going. But I think we should, everything's telling us at the moment we should expect this to become the dominant variant and probably take over from Delta. It seems that way with the stats that they're talking about. But at the moment, whilst I think its prevalence is growing, if I had some wood to touch, I'd touch it, but it doesn't seem to be resulting in serious hospitalizations and death. So the death rates are pretty consistent. But I think what you'll see is that it will dominate the headlines, and it probably will become the variant that is dominant across the UK. And where it started, will we ever know?
Okay, and then just in terms of sort of like capacity and managing the sort of the peak winter load, even before Omicron, it was obviously the NHS, as we read publicly, is obviously under a lot of strain itself. Yeah. What does that mean for Totally in terms of sort of like managing that peak load through? We're obviously pretty much in there coming up into Christmas, a potentially super spreader event, and we know what happened in January, February, March of last year, and it was unprecedented. So how are you guys seeing that and modelling it and sort of like flexing capacity?
We were already sort of planning for a hard winter. This is our the second half of the year, we always see more people than the first half of the year just because of the climate, the flu, never mind COVID. And so we were already planning with the NHS to up our capacity and be able to flex to that. The difficulties come for us when something happens that isn't built in. And we were already planning for it to be busier. We were already planning for that increase. Will it be enough? We don't know, do we? I think what's fair to say is the NHS is struggling with the demand. We know that primary care is going to be stopping seeing patients again to focus on the booster vaccination programme. That for us means that more patients will rely on 111, and it's almost like that perfect storm. So we were already planning the additional capacity. We're doing our best to flex that and increase, and we'll continue to just work with the NHS to do what we can do. The difficult bit is, Paul, there are a few unknowns in there that we just don't know. If Omicron does become the prevalent version of it, is it going to mean more people getting it, but are they going to be treated at home? Are they, going to get away with taking advice on the telephone and not going to hospital? A few unknowns. I think the thing that you can be sure of is our urgent treatment centres are fully staffed. We're ready. Our capacity was already planned to be above what it was last year. So with a fair wind, we'll be okay. The bit we don't know is exactly where this is going to go. It's too early days, but we're plugged into that system, and we'll be supporting the NHS and doing what they want us to do to the best of our ability.
Thanks very much. And then in terms of sort of like, longer picture, I did read about the NHS that they are sort of like looking at ways of pushing more out into the treatments out into the community using telemedicine. Certainly my GP, for instance, for the last 12 months hasn't had face-to-face appointments, and I don't think it's planning to either. Now that presumably is going to put more demand onto third-party healthcare providers, both on a planned care. Things like, treating chronic conditions that would be treated and seen as a consultant in hospital is now being pushed pushed into maybe just into telemedicine, or alternatively, obviously, within sourcing, etc., trying to reduce the backlog. How you think you'll see that sort of pan out over the course of sort of the next 12 months?
Yeah, and I mean, just being clear, right at the beginning of the pandemic, we moved as much of our work onto video conferencing as we could. We do a lot of telephonic triage, we do a lot of video triage, but also, as you can imagine, a lot of people do need to be seen once they get to that stage of it's very clear that they need further support. I mean, I don't know if you've seen the latest stats that have actually come out by the British Medical Association, but they're really, really interesting. And I've got a couple, but what the BMA is saying is that between April 2020 and April 2021, there were 3.9 million fewer elective procedures in England.
Wow.
They're also saying that there was 26.8 million fewer outpatient appointments. So that pressure, if those people that do require treatment are coming through, and it is very clear now that they do need face-to-face care. So what we are doing, and every other NHS organisation we're working with, we're fully following the COVID safe guidelines regarding the personal protective equipment. We have different streaming for patients. We've obviously got COVID testing whenever we do need to see them. So you've got multiple things that you are doing to not only protect your patients and get them seen and into the most appropriate setting, but also how you protect your staff going forward. And I think, we and the NHS are pretty good at that now. And it's just a case of making sure that as the pressure mounts, that you stick with those new protocols for how you screen patients. But certainly, the number of people waiting, that's not going to go down any time soon. We're doing our best on elective care, but that's where it gets that balance of how many people are in hospital. Can we still operate elective care? Our insourcing business is growing, as you can imagine, and the order book is growing, and we're facing Christmas. So, I mean, I think for us, we're very proud of what we did during the pandemic in terms of providing that ongoing support. I think you'll see in our half-year results that, that's our new business as usual now. This is what we do. We're very good at planning that through, and we're here again for another winter, and we'll continue to do what we're doing. But it's pretty clear that the pressure's on. 111 is extraordinarily busy, and the other stat that the British Medical Association threw in there, that waiting lists currently are 236% more than they were in August 2019. It's scary figures. And whenever they quote figures, they're just for England. And of course, we and our insourcing business are working across the UK. So, you can add on all of the backlogs for Scotland and Ireland and the Republic of Ireland. So it's busy, but I think what we've got to do is carry on showing our reliability and our ability to ensure that patients get into the most appropriate setting quickly and efficiently. And that's what we've done, and that's what we'll continue to do, Paul.
And then, given that unprecedented demand right across the group, three divisions, but particularly, insourcing with the outpatients and the 111 care, you've obviously got two sort of ways of increasing capacity: organically recruitment, but also M&A. Can you just talk through how you're finding expanding that capacity to meet the unprecedented demand? I mean, first of all, sort of trying to get enough heads to be able to do, say, the 111 and insourcing, how you're finding that to flex. And then likewise, just give us a bit of colour on terms of what acquisitions and targets, if you're looking in those particular areas, to give you extra sort of firepower to be able to deliver on the huge demand.
Yeah, I certainly will. I mean, recruitment, I think for every business since the pandemic and lockdowns came out, recruitment's challenging. We've never stopped recruiting, and so all the way through the pandemic, recruitment continued and continues to this day. The reason that we have call centres up and down the UK is it's easier to recruit in some areas than others. London's a particularly difficult market to recruit into 111. I could guess at some of the reasons, but it's just difficult. So we've got call centres, we've got big call centres up in the northeast. both in Newcastle and Sunderland. We've got others in Staffordshire. So what we do is we team and ladle, and it won't be that, you know, our call centres in Newcastle, they will take calls in London. You know, our whole system is a national platform, so that wherever the pressure comes in, that can be pushed out to a centre that has got capacity to deal with it. We are also part of the National Resilience Solution for 111 nationally. So we play our bit on that, you know, and if we get a peak in our calls, we'll get other providers helping us with that. And likewise, that's what we, you know, that's all part of the national resilience across England. So it's not easy, but as ever, we've got our in-house recruitment teams that have been working throughout the pandemic, and we bring in people all the time. What we've also done, and we've got massive feedback from the staff on this, we've reviewed our whole terms and conditions and benefits package to try and give us that bit of, we are a good employer, we do look after our employees. And so hopefully we're not oozing people out of the back door, you know, quicker than we're actually bringing people in, because you've got to look at the whole picture, haven't you? And people now are looking for that good employer. We do working from home wherever we can. We facilitate flexible working, and I think that is one of the USPs that Totally is good at. We do have flexibility. We don't bring bureaucracy in if we can help it. You know, if we've got people who can only work school hours or actually want to work in the evening when their kids have gone to bed, and it is a work from home role, we'll enable that wherever we can. You know, we're 24/7 business, and so it works for us to actually enable people to work flexibly so that it works for them as well. But it isn't easy. And I don't think it's easy for any business right now. But I think with the combination of approaches, good employer, good benefits package, good terms and conditions, and a very, very good, credible recruitment team, you know, it's we're getting there. So it's okay.
And on that organic side, are you thinking about sort of like putting it, or looking towards putting more technology, I don't know, big data, AI, to be able to sort of like, I don't know, improve the productivity and efficiency of that triage process, to be able to get, hopefully, sort of like a better quality of work for the guys and your employees, but also a faster way of dealing and servicing the NHS?
It's a tricky one. The simple answer is yes, we're always looking at that. However, when you are a provider of 111 services, it is a national platform. So whoever the provider is of 111, you all have to use the same system. Right. So we can't be doing anything to that system. NHS Pathways is the system that's used, and you know, every call goes through that process. But what we do is we closely work with the digital team at NHS England to ensure that any ideas that we've got, that we've tried and tested that would work, can then be brought in on a national basis. A little bit different in other parts of the business, and of course where we're not using the NHS systems, AI does actually feature in what we do. The way we treat our physio patients, the way that we actually see people through that whole pathway of care is much more in our own management. However, I can't stress enough that on 111, where the big pressure is, it's that national system and we all have to use the same. But NHS England are changing that dramatically, and there are elements of AI in there that obviously we harness alongside the NHS.
Right, okay. And then can you just give us a bit of sort of colour on the sort of direction of travel of the M&A strategy? Because obviously at half year you talked about you're progressing a number of sort of, you know, bolt-on acquisitions. Which areas would it be in the division, or would it be in your 111 extra capacity, or would it be insourcing or planned care? What sort of, like, obviously got unprecedented demand across the whole lot there?
No, it's difficult to sort of give you details without doing things that I shouldn't do. But we are in advanced conversations with a couple of interesting bolt-on acquisitions. So we're not looking to raise money in the city, which I think is a really important statement for our investors at the moment. So we've got a couple of really interesting ones. One which would enable us to move into slightly different markets for us. So just widen the way that we work. So still supporting people with their well-being and preempting illness a little bit more than reacting to ill health. So there's some really interesting things there. And then obviously I'm then looking at another couple of bolt-ons that would provide us with additional capacity to be able to respond to the growing and unprecedented demand that we're seeing based on those figures that I've just read out. It's not going to go anywhere soon. The bit that's really important for us is they've got to be high quality acquisitions. We've been there, we've done turnaround. We don't need to do that anymore. So we can be a little bit picky. Yeah. But also at the same time, we've said that they need to be immediately earnings enhancing. So looking at businesses that can come in and make a real difference and deliver that capacity, but in two very, very different areas. One, helping us to continue doing what we're doing, but others, there are some interesting new markets out there as a result of the pandemic, Paul, that we're seeing demand and that will enable us just to seamlessly move into those and actually just widen what we do a little bit.
Yeah, I mean, certainly telemedicine is just one of many. So anything with med tech on it is definitely booming, because if you can alleviate some of the pressure on the NHS, that's a home run for those guys, particularly if you can reduce the cost of delivery. And
absolutely. And I think it's that bit of, if you can support individuals to look after themselves as well, because I think now there is a huge frustration amongst patients that they can't actually access services that they need. So anything that we can do to help that a little bit and to keep people feeling well, keep people in work, and support them on a wider scale. So yeah, there is. We're always a bit careful with all this technology stuff. There's a load of apps out there that, thank you very much. But there are some out there that are really interesting.
Yeah, no, I agree. The best thing is just to make sure you retain that quality of your M&A. So
absolutely. I'm not about to compromise that in any way, shape, or form. But no, there's some really interesting things there that I'd be very disappointed if I couldn't update you before the end of this financial year.
Yeah, and then just talking about the actual the net cash figure you had was 18 million. Is that a sort of like that's obviously a month end figure? Does it flex or volatile? Does it fluctuate in mid month at all?
Yeah, I mean that was the month end figure, and I think underlying that we've stabilised around 17.2.
Right. Okay.
All of the time, so it's not much less than that. And what you'll see is we do have big swings in working capital in months. So yeah, our business is mainly a people business. So payroll. So when payroll goes out, it dips. But literally within days of that dip, we get paid by the NHS. We always get paid on the same day of the month. We get paid in month for the work that we do. So we know exactly what we're getting. It's all on 1/12 basis. And then on a quarterly basis, we tee that up in terms of, so what's happened with demand, what additional funds are required. And as you can imagine, none of our contracts are underperforming. They're all overperforming. So you get your 1/12 and then you do that review on a quarterly basis and you get that top up. So you'll see a swing of about 4.5 million in month, but then it comes straight back up again. So 17.2 is our normal position, and obviously cash generative. So that's going up all the time, which is why we're not a bank. We've got to sort M&A out here.
Yeah, I was going to say you've got a lot of money there, haven't you? Which is obviously a nice position to be in, no doubt about it. Yeah. And what I know you can't talk about it that much at all, but I mean, just in terms of sort of like trading in October and November, obviously you've been very busy and you've had to make extra investments. So tracking as per what you said a month ago?
Tracking as per what we said. And again, which is why when we put our results out, we did say to people, don't just take the 3.3 million EBITDA and double it, please, because the second part of the year, the costs are always up a little bit more for us because we've got more staffing. But as a board, we're really comfortable that we will at least achieve expected market expectation, but we're expecting to overperform a little bit, Paul. The bit is, how will that go? And that goes back to where we started our conversation in what's the flu going to look like, what's COVID going to look like, but we're confident.
And I noticed your two brokers, Allenby and Canaccord, have got sort of like penciling in about 122, 123 for 124 for this year for your turnover, etc. Just big picture wise, given your sort of M&A and the unprecedented growth, say in 5 years, where are you sort of like looking to get that? Are you looking to sort of double the sort of the top line over that? Is that, I mean, I know nobody's going to hold it to you because this is purely aspirations, but it's just a sort of like direction of travel and the sort of the goals, the long-term goals of the business.
Yeah, and I think, what we're seeing in that, when we first launched our insourcing business back in October 2019, we didn't know there was going to be a pandemic. We didn't know that the waiting lists were going to grow. But in our own business plan, we'd got that business as becoming a £20 million business in 3 years. Now, that slowed down a bit because elective care had to stop during the pandemic. But when you look at the waiting list figures now, we're reviewing that business plan because it's way above what we thought would be a £20 million business. So it's reevaluating that. So I think would we double that in 3 years? Maybe. But I think what you can see is, you're looking at 125. I think 200 million is something that's quite achievable. It may well be more. It depends on what happens overall. But I think the big message to get across out there is, the way we work now and the demand that we're seeing, we absolutely believe that is the new business as usual for us. We don't see this changing or going away anytime soon, because what's clear is, coronavirus, COVID is now becoming endemic. It is something that we as individuals have to learn to live with. How often will we need vaccination boosters? We don't know, but I think it will at least be annual. It will probably be 6 monthly. So you've got to build all that workload in, and then you've got this massive backlog on waiting lists. So for us and for the time being, 5 years down the line, I think we will still be working in exactly the same way. And therefore that the growth is a really realistic, yep, it's going to happen, irrelevant of M&A, because obviously there's no M&A assumptions in any of the figures that are out there currently.
Yeah, it does seem there's a direction of travel for the health service. It's got to alleviate pressure on the hospitals, and it's changing its procedures and policies to push more out into the field, whether it's local care or helping patients, as you rightly say, which has got to be just a huge tailwind for third-party providers
Absolutely. I mean, you look at us and other providers around. Outsourcing and insourcing has been around forever with the NHS, and it's always been in these areas. The demand in those areas is huge. What our job is to make sure that those people that do need to get into NHS services can do so quickly and effectively. And for those patients that can be treated in a different way, we can actually facilitate that, because that enables the NHS to do what only it can do. We're not a competitor, we're a partner, and that's what we're all about. And that's where the big opportunities and the big demand is, Paul.
Yeah, and then you just quickly talk about the various margins in the divisions, because you're going to see, with that increase in top line, you're going to see operating leverage both on the through your operating expenses, but also because of the divisional mix, I guess.
Yeah, and I mean, net margin, we were very clear right at the beginning on this, that, because we deliver service across the whole spectrum of care, those margins will vary a lot. So we were always saying that we were targeting, net margins of high single digit. Now, what we're seeing within the business currently is, our highest margin part of the business is insourcing. We said right at the beginning, 25 to 30% gross margins on insourcing. And then we've got the lower end, which is 111, which is the high volume, lower margin because of the care that you're providing, is sitting down there at 7-8%. But when you take that blended in terms of how it's growing, we put out in the figures, Lisa was targeting 17-18%. We achieved that, and we expect to be able to maintain that now.
Oh, good. Okay, brilliant. And then just news flow going forward. Obviously you've got probably a trading update, I don't know, sometime in April or May, but you hopefully have some maybe some contract news in between, and maybe even some, as you talked about, the M&A. Yeah,
I mean, I'd be really disappointed if I wasn't talking to you about M&A. Like I say, before the end of the financial year. I don't want to say much more than that, because I don't want to tempt fate, but it's really exciting times for us. We are seeing organic growth now, but it tends to be more in scope creep more than anything else on different services that we're being asked to do to help with the demand and COVID. We're still doing some of the COVID specific stuff. We are supporting asylum seeker services down in London, and we'll continue to do that. We're still doing the clinical assessment services for some of the ambulance services, which is all organic and rolling. What we do see at this time of year is that tenders tend to tail off a little bit from the NHS. It's not what they're focused on at this time of year. So, the least you'll get from us fingers crossed, is M&A update. You will get a trading update on that. But I can assure you that everything's going in the right direction. Tenders, it's all changing a little bit, but we will update as we can, and we're going to be trying to push that news flow out to everybody.
Brilliant. Thanks very much, Wendy. I'll just point investors to have a look at the Allenby and the Canaccord notes, because the actual target prices there are roughly around about 60p to 65p compared to the shares, I think, are about 33p. So roughly half of where the target prices are. And I actually think, just looking at the numbers, what you've told me, that is significant scope there to, if everything sort of falls into place, to beat those numbers as well. So anyway, thanks very much for your time, Wendy, and look forward to touching base on the news flow going next few months.
Absolutely. Yeah, thanks for your time, Paul. It's been a pleasure as ever. Thank you.
Thank you.